Tesla stock CEO Elon Musk announced in his latest quarterly report for Tesla that they would not be raising capital in the form of an offering or otherwise because they felt they were doing well enough that they didn't need any additional money. But then he went ahead and put out a $2 billion offering, which begs us all to question, why did you lie to us, bro? So did Elon really lie to us, or was it just a matter of the situation that occurred after those earnings reports came out? Well, if you look at when Elon made that announcement that he would not be looking to raise capital, the price of the stock was valued much lower than where it's at now. So if I bring you over to WeTradeHQ.com, it's a free platform that I've created for anybody who's looking to learn how to trade, and went to my favorite ticker, obviously right now, which is Tesla, and looked at the chart here, you can see where I have this marked here right around $567 per share was when the earnings call came out on January 29th. Since then, it went almost doubled at that point. So in this situation, Elon Musk decided, well, if the stock was going to double, he probably didn't expect that kind of reaction. So obviously, in this case, it was a little bit unexpected. I don't know if anybody, including Elon, expected his stock to double days after that quarterly earnings report came out. So now he's left here with an opportunity to perhaps capitalize on this massive move in the market in order to better his company. But I want to back up a little bit and just kind of give you what exactly has been going on in case you haven't been keeping up with this story. And I want to reiterate here. So Tesla priced its $2 billion stock offering at a 20% discount to the recent all-time highs in a move that seeks to capitalize on a rally that's added nearly 50% to the company's market value over the past month. So basically what this secondary offering is an offering that comes after an initial price offering. So anytime a company decides to issue shares after their IPO, it's what's called a secondary offering. So if you're not familiar with the IPO process, when a company decides to go public, they are issuing shares for the public to buy. And so what's going on here is that secondary offering. They're adding more shares to the share structure of this company to allow more people to buy this particular stock at a certain price in order to raise capital for the company. Now, in most cases, investors would see this as a negative, and the initial knee-jerk reaction was that the company actually did sell off some shares pre-market, but then has now gone up over $800 a share. So why are people buying this up? Well, I think it has a lot to do with the significance of the offering itself and the intent in which they are using the capital that they will be raising as a result of this offering. Tesla is still very much a growth company, and the whole reason companies go public is so that they can do things like this. And in my opinion, Tesla's going about doing this the right way. Lots of times you'll see penny stocks or even low cap stocks do offerings all the time to try to get themselves ahead. And in most cases, they do it when the stock is already down. So you're kicking the stock price as it's already down by adding more shares. And so people just view that as a negative outlook on the company itself. They don't want the value of their shares to diminish by dumping more shares into the stock itself. And so that is usually why it's associated with a negative or a downward move on most stocks. But in this case, Tesla's doing it the right way, and the stock price is way up in the 900s. And so they decided to do this offering in order to, raise more capital and get some more debt off of the books and use this money to do other things that they would like to do within the company. And to my point about the significance of this capital raise, well, again, if we go back to WeTradeHQ.com and look up the Tesla profile, you can click on the financials tab here and see that their market cap is valued around $145 million. And so this $2.3 billion capital raise may seem like a big deal, but when you compare it to the actual market cap, it only amounts to be about 1.5%. So the impact here is really minimal. Also, I believe that there's a battle going on between how people evaluate car companies like they did in the past, as they always have, and treating this also as a tech company. And so given all of that, the reason that this stock continues to go up, in my opinion, is because there's a battle going on between, does this get valuated as a car company? Does this get valuated as a tech company? And so I think that if we look at what Warren Buffett's right-hand man, Charlie Munger, uses to evaluate car companies, he evaluates them on three basic things: the rate of growth, profitability, and the power of the brand. And if you just take those three key principles that Charlie Munger uses, Tesla is knocking all of those out of the park and surpassing the competition by far. The rate of growth is astronomical as compared to all of their competitors. The profitability has now been there over the last 2 quarters, and obviously the brand is now casting a wide net and is already a household name. The brand itself is seriously beginning to rival that of Ford and GM, both staples in our American culture and history for over 100 years. So imagine the type of impact that that's having as far as the brand's concerned alone. But taking that traditional part of it aside, if we go and look at what the Volkswagen CEO stated about the evolution of the vehicle and where we are headed as far as EVs are concerned, he stated that the electric vehicle will soon become the most important mobile device in our lives. And so my opinion here is that Tesla is so far ahead of everyone else that it almost doesn't matter what they do at this point, as long as they continue to grow and do things that are for the good of the company. And to my point, Tesla issuing this offering, it couldn't have happened at a more perfect time. They can use this money to continue to go further ahead of their competition, especially at a time where their competitor stocks are all going down. Tesla's the only car company right now that has gone up in price as compared to Ford, GM, and all of their other competitors. So in this electric vehicle space that they are in, they are already so far ahead of the game and the pack when it comes to competition. Now they get to basically drive the nail even further with having additional capital to even get even further ahead of the competition and maybe even take up a lot more market share. So that is why people are buying the stock up despite the offering. At this point, it's really difficult to see how anybody's going to be able to catch up to them in the near future. I don't know how Ford and GM or any of the other major players such as Toyota is going to really end up keeping up with them. Tesla's so far ahead of the pack when it comes to battery storage, when it comes to ranges, artificial intelligence, robo-taxis, all that stuff that they already have in place. And I think that the competition right now has no idea what to do with itself and how they end up solving this quote-unquote Tesla problem that they have. And finally, I think that Elon also needs this money because of the level of demand that's taking place. People want these cars faster than they are being made, and we saw that how evident that was in the latest quarterly report about how they were struggling to kind of keep up with demand. And so if they have more money to build more gigafactories, which we already know that they're going to be building in Berlin, and there was also a teaser about them building one in Texas as well, that they need this capital to be able to continue to grow and to continue to advance ahead of all of their competition. All right, so as I alluded to in the last video, I was trying to start something new this time around, and I wanted to bring questions that people had in my videos themselves and answer them to you personally. So today's question comes from Mike Chang, asks, new to investing stocks, say you sell your Apple stock that you made 15% on last year, but don't actually put it into your bank account. Is that still taxable? And yes, it is. Anytime that you sell a stock for profit, it then becomes taxable, depending on how long you've held it. If it was for a short-term gain, you end up getting taxed on it as if it was regular income. So I hope that helps you. Doesn't matter if you put it in a bank or not. If you sell that stock and it's just sitting in your brokerage account, it then becomes taxable income as long as you sold it for a profit. But as always, I recommend that you go and talk to a tax professional if you want to get all of your questions answered as far as what happens when you get in and out of stocks, sell them on a regular basis, or maybe even just on your long-term investments. Anytime you want tax advice, it's always important to go to a tax professional to make sure that you're getting the most clear and positive answer. So now I want to hear from you. What are your thoughts about this offering? Do you agree with me? Do you think that they're doing this for a good reason and that is why the price of the stock has gone up? Or do you disagree? Do you think that this is craziness and that he shouldn't have done this and gone back on what he originally said in the latest quarterly report? I definitely want to hear from you, so leave the comments down below. I certainly would love to hear from you. I reply to all of them, and if you ask a great question, it might just show up on the next video. So that's going to do it for me, guys. As always, again, if you want to check out my mentorship where I show people how to invest and day trade in stocks, click the links down below if you want to check those out. And as always, folks, I will see you all before the bell, and B. Smith is out. Hey guys, thanks for sticking around and watching to the end of this video. If you want to see more content not related to stocks, I encourage you to go check out my new channel over at The Barcast. It's a great podcast where we talk about our lives as entrepreneurs and bring other entrepreneurs on as guests as well to get their stories of inspiration and motivation. So be sure to go over and subscribe to that channel as well, and I'll see you before the bell.